everybody, welcome back to the Everyday Growth Advisors live stream. It's Fundamental Wednesday. I hope you guys are having a great day. Great start to your morning. If you have your coffee with you, that's awesome. Remember to sit back, relax. This is a stream where we take care of everything for you and we do the sipping. So we have a pretty jam-packed schedule today. Going to be doing a fundamental of Alibaba a little later today. We'll do it together. I only filled up the basic information on the sheet, but we'll do all the rest of it together. These are previous values from other intrinsic valuations. So we'll do that one as a team today to show you guys how I do it. Couple of things before we start. As usual, we'll get into the pre-market live stream just in a second here. And break down the news and all that. For everyone who hasn't followed me on Twitter, I highly recommend to go follow me. EJ Learn is the handle. And from yesterday, kind of posted a couple of things here that were pretty solid. Kind of like my market commentary with charts included. As I see them, I post them here. It's just an easier place for me to keep track of everything and then kind of revisit it and going forward. So as of yesterday, anyone who followed me in Facebook was a nice little play, about 100% play at the end of the day. This was, I hadn't taken profit at this moment, but I took profits later on and then dumped about half of those. So basically dumped the profits into a free roll today to play some $285 calls expiring this week. So a little risky lotto there. Hopefully it pays off. We don't know what's going to happen, but I like the prospect. For today, on the watch list, for my personal watch list, or what I'm watching, is going to be Boeing, Facebook, Disney, Baba, Microsoft, and Fastly. And not all of these are going to be bullish or bearish. It depends on which side it comes to. And I've dropped a couple of charts here for you guys to have a look at. So with Boeing, we have a pre-market being sold down to a little. Two targets today. First the 0.618 over here, and then after that the full extension at the one extension here at 189. This would be the two levels to watch with Boeing if we get a run up here. This red zone up here is a potential supply zone, so be careful of that. Between the 183 range to the 189 range. So this has been a area of where bears have been contesting, so be careful there. I entered some long swings yesterday, and so on the big drop I entered them right here, and so be looking to play this back up again. We've flipped Boeing a couple of times now on this live stream, so I hope you guys have been following along, just making almost 100% each time. Facebook with the pre-market here looks like it was up when I first made the chart. Now I'm not sure where it's at. Looks like it wants to continue running. We can't be 100% sure, but I'm pretty certain that we will at least get to 285 to reach this 0.236 fib level. Very high chance that will be hit today. Let's see if we can take it out. I think we did almost get there in the pre-market, so let's see if we can actually take it out and then progress on to the other fibs. So that will be something to watch. Another one, Disney, kind of getting to a fork over here. You can see with previous actions here. This will be the levels you can expect a kind of an upward fork or a downward fork here. Pre-market was down a little bit, but you should watch this one because it's kind of in a flaggy stage here. Looks like a wave up, a wave down, wave down, wave up, and it's looking to build a solidified bullish position here if the market continues to rally. So I will be watching for this one. To a break above 132 with good volume here would be a good setup for a Disney long play. So these are all things I'm watching today. Baba, our live stream. This live stream couldn't have been a better timing this week. And I've been joking about it. I think from Fridays onwards, whatever ticker we pick, we're just gonna go ahead and take it because the past two live streams, that's all we have done. We picked a ticker and then it rallies, and we end up losing on it. Or losing the entry, and Baba hasn't given us an entry. I just don't feel comfortable taking this where it is. So at least today we will figure out what the intrinsic valuation of the business is based on our calculations, and then we can actually make it more solidified reasoning to either buy long or go short here. I do like the prospect of playing a downward play, and my target would be the 50% retracement from the swing high and low here. Looking at 267 as a potential target, but you would have to buy a longer term option, which would be a month or two out. I would say swing trade, probably 50 days or 80 days, something like that. And lastly, well, there are two more. Microsoft breaking after hours, breaking all-time highs up to 218. Looking like we may see a rip up here. Remember that we've been covering the stock for a while. Microsoft has been on the top of my long-term investments, we have been touting on the live stream that we know the intrinsic valuation of the stock is about $230 to $240 range. So that would make sense here. The breakup above going up to the upper channel here would make sense in the future. Now, how long it takes to get there, that's obviously we don't have a crystal ball, we can't tell. Okay, so keep an eye on Microsoft. That's another one. Fastly, looking to break out of this little cup and handle formation that it's been forming here, and looking nice to make a run back up here. Let's see if it can break out of this zone. That would be a nice little breakout to play today. So watch this one as well. These are all the things I'm going to be watching today. If I see some solid setups, I will be entering them. Simple scalps or day trades. Keeping it simple, no need to be crazy. Okay. So I will post continually on Twitter when I see updates. And I just want to check what Facebook's at right now. So Facebook at 282.63 here. And that's going to continue probably running today. Let's see what happens. Nice little cup and handle and then a zoop up here. So, well, welcome into the stream, guys. Good morning. How are you guys doing? Hope you guys are having a good morning. Make sure that you guys smash the like button. That's the only thing that I ask for when you're here. I'd appreciate it. And let's get this done. Okay. Pre-market movers and the news first. So let's have a look here. China makes concession and call for talks on U.S. audit standoff, blah, blah, blah. Apparently, they're still going to proceed with the trade deal, so it doesn't seem too bad. Kim Jong-un regime baffles world with contradictory signals, blah, blah, blah. Okay. U.S. fluctuates with dollar. Bonds decline. Bonds decline. Okay. Interesting. Ahead of the Fed meeting, or the Fed talk that's going to happen on Thursday. Bonds decline. Bond sellers getting out. Okay. Interesting. Air Asia X seeks debt with help with flights unlikely. Okay. Xiaomi profit beats after growing premium phone share. Okay. China to buy record amount of American soybeans in 2020. Alrighty. And Apple plans augmented reality content to boost TV plus video service. Okay then. Interesting. Meanwhile in Wuhan, these guys are partying it up. Amazing. Good job, man. Good job. Let's see what's going on here. U.S. stock futures waiver after S&P 500's third straight record close. Why are we surprised? This market is in a melt-up phase right now, so expect us to go higher. But at some point, there definitely will be some kind of a pullback, so we have to be aware of that. And that kind of a mini pullback did happen yesterday, but it wasn't so much so what we were expecting, actually. That wasn't really a pullback. It was more like a minor correction, and then before we continue running again. Exxon's departure from Dow Jones highlights markets retreat from energy bets. This is exactly what I've been talking about. And I like that they're piling on the bad news here. Okay, I actually really like the fact that energy is just getting beat. Okay, the more it gets beat, the more it's attractive to me. Okay, because there is no, like, the more that something gets sold off, it makes it more attractive as an investment, not more, especially if the company is a fundamentally sound company like we have covered last week. Okay, so if my investment thesis still stays the same, this is another great piece of news that comes out for me, because I get more of what I want that I know is at a good valuation for a cheaper price. And that's what I'm really looking for as an investor, right? Long term, what you want is to get your things that you want to buy at a discount. You don't want to go to Trader Joe's and buy a piece of, I don't know, avocado for triple the price, do you? Like, that's buying tech, right? But if you see a piece of avocado for a third of the price, you're gonna buy like 3 more, right? Because you know that the quality of the avocado from Trader Joe's are good. So it's the same concept, right? Same concept, okay? China Star Board defies financial gravity, blah, 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 okay. U.S. Treasury yields rise after trade progress, okay. All in all, looks like bullish news, in my opinion. Looks like bullish news. Let's have a look at the pre-market move. Whoa, what the? Wow, Salesforce at a 14% move. Jesus. Wow, okay then. I guess it just mooned. DKS, 11%. Don't know what Anaplan is, but it's up 13%. Intuit, 7%. HP, 6%. Splunk, this is another cloud-based, I think, database, like data analytical company. This used to actually be right opposite the place I used to work on, Santana Row, in San Jose, California. Roku up 3%. We were talking about Roku as well, so actually let's have a look at that real quickly. We were talking about Roku here, possibly popping up for a swing trade. We spoke about this maybe 2 live streams ago or something like that. This is another one, possible play up all the way to 169 once again, right? If we can maintain the bullishness, that would be an interesting one. So keep an eye on Roku as well. Maybe I should add that here into my watches for today. Roku will be one to watch as well. Roku is one of those things that can just run, you know. Okay, biggest losers here. Not really interesting. Pre-market movers here. So durable goods were better than expected. News just broke out, by the way. Durable goods orders and for month-over-month and core durable goods. Okay, this were better than expected. NEO up 8% again. Jesus, my goodness, this stock, it's crazy. The flow never lies, guys. The flow never lies. S&P 500. Let's see, Salesforce. I cannot believe Salesforce is up 15%. Jeez, that is crazy. NASDAQ here, okay. Cool. Everything else insignificant. Let's go over to the SPY, NASDAQ, and Dow Jones technical update here. So we've been seeing a lot of corrective and impulsive waves here. Bulls are certainly in control in this market, and I've been saying that for a while. The bulls are definitely controlling the long-term trend here. Nice little impulse correctives. We're setting up. We're kind of, if you can see, the volatility is dying down, right? The volatility is dying down. So we need volatility to come back. If volatility comes back, what does that mean? It means abrupt price movement. Okay, either upside or downside. So it's either we're gonna see a big move up or a big move down. That's what usually happens after volatility dies down. So. You can see a similar thing happen around here, right? When volatility died down, and then we had a big wave up, right? And then we had a big wave down. So volatility drives prices up and down, and we'll have to see how this performs. But right now we're bouncing nicely in this channel here, and Dow looks like it wants to continue up. So I really do hope that it continues up. We are well positioned for this. S&P 500, nice bounce on the 161, 100 fib levels here before running back up here. So let's see if this can hold today. And the NASDAQ is just flying off the charts. Completely tested the 161.8 fib over here. And now going back up here as well. So remember, stay hedged. It's going to pay to stay hedged. And be careful, okay? Keep your eyes open for rug pulls and stuff like that. It's been happening quite a few times. Fake outs, breakouts. Those are all real things right now. Okay. Welcome into the live stream. Yo, more not sure about yo, but I'm ready to need nuggets, pen, paper in hand with open mind, positive expectations. The rest of this month will be the best of this month. Let's go. Dude, I love your energy, man, Jason. Thank you. I made a Twitter solely to follow you. Thank you for doing that. That's awesome. Good morning. Can you check PayPal charts? This mentioned Roku yesterday. Yes, Roku profit target. Okay, great. Good morning, AMD. Any bull movement? Okay, guys, people who are new to the live stream, there is a way that you do ticker callouts. You put the ticker, you do the price, strike price, and then you do the expiration. And it has to be in this way in order for me to break it down, okay? Because I can't answer a question like, can you check PayPal chart? I can't do that. It's going to be a very off-putting thing to do for me personally. It doesn't give me any direction, and I can't keep doing that because it's going to be unfair to other people. And then questions like AMD, any bull movement is also not specific. I would rather you give me a situation where you are looking for a specific situation that I can validate, okay? Because if you ask me AMD, any bull movement, it's not going to give me any... It's basically, I can tell that you are looking for my opinion, but you're not done any of your own work. So you need to do some work before you come to the stream, because this is, a stream where it works both ways, okay? Okay, cool. Now, another thing that I need to announce here is, remember that yesterday we made a post on Instagram. The Everyday Growth Advisors will be holding wave number 7 of the beginner's course. If this can load. Please load. Come on, dude. Too many things going on here, I think. Let me make sure my battery is... There we go. I knew this is the issue. It's always the problem. Best performance. There we go. Okay. So, come on now. Okay. So we will be starting wave number 7. The registration for the beginner's course is going to be on Saturday. Save the date in your calendar. We sold out the previous wave, and I'm pretty sure that there are a couple of you who want to join this wave. I have received a ton of DMs about this wave. So make sure that you save the date. 29th of August at 12 p.m. Eastern Time. You can go to optionswing.com and sign up for the class. Now, right now, you cannot sign up. The registration only opens at 12 p.m. We want to give everybody an equal opportunity. Go to OptionSwing, click join now, scroll down, and you will see the beginner's course will have a enroll now button when it is ready to enroll. Okay, right now, as I said, you cannot enroll. It will only be live at 12 p.m. Eastern Time on Saturday. Okay, remember that now I have done a added benefit for you guys. Okay, I have been practicing a little something special with the existing members of the past batches, the alumni, and what I've been doing is I've been adding live trading sessions with them, which basically pays for the course. Okay, I swear to God, if people, like, there were at least 2 live trading sessions that I've done with this group right now, and you can ask if anybody's in the chat right now, they'll know it. Okay, if anybody from the beginner's course from this wave is there, they'll be able to tell you that we've been doing the live trading courses and they have been paying. Okay, because I'm basically trading with you and I'm showing you the setups and I'm going through with you how to fix the problems that you're going to have, and you can talk to me, I'm talking to you. We're kind of surveying the market together, and it's a 1-hour live trading session. I do it usually at 10 a.m. Eastern Time, 30 minutes after the market opens, and we kind of bang it out for an hour, get whatever trades that we can in, make some profit, and that's it. I'm gonna do 2 of these during the course of this 5-day program. Okay, not to mention, it's a 5-day program with 3-hour live classes every single day from Monday through Friday. And these will be recorded and sent to you so that you can view them forever. Okay. This is some testimonials. If you want to read it, please have a look at my Instagram. I don't want to use the live stream time here to do that. I think that, the testimonials speak for themselves. I really am happy with the progress that my alumni are making. And I hope that if you are really struggling with trading and you find yourself constantly losing money, I think you should take the course. Okay. We concentrate on how to build a sustainable trading system using probability and statistics, improving the odds of success through risk management, and we put capital preservation at the forefront. That is the core values of the Everyday Growth Advisors beginner course. And then we also fix psychological barriers that trick your brain into a auto mode. So the curriculum is something like this, where we go through financial indices on the first day, risk to reward as a concept, behavioral mistakes, technical analysis, and then how to plan and execute a trade on day 1. On day 2, we get into trading strategies, the types of different trades, planning entries and exits, wave patterns, supply and demand zones, and volume breakouts. And then on Wednesday, we go through introduction to options trading, the Greeks, delta and implied volatility, and choosing the right contract. How do you choose the right contract? What kind of contracts do you choose? Okay. And then on Thursday, we do introduction to fundamental analysis. How do you read earnings reports, and how do you value a business? This is a comprehensive course. I can almost guarantee that if you take this course, by the end of it, you will really change the way that you trade. Okay. And I know this because people have been showing me their progress. And then on Friday, you learn how to use the Option Syncs community. How do you use the bots within our community to generate trade ideas? And how do you get a passive income by selling options, which is a parlay. It's kind of a bridge into the intermediate course that you can take, which will be coming up in September. Okay. Now, there are bonuses, live daily Q&A sessions, 2 weeks access to the Option Sync Discord, one of the most best trading communities you can ever be a part of. I've personally been with them for months and I love it. There are going to be daily retention quizzes, and all classes will be emailed to you every single day to all students. Okay, so I hope you'll take a stab at it. It's a 5-day course. Non-Option Sync members sign up for $330. If you sign up to Option Sync before the Saturday, you get $80 off through a promo code that we'll put on Discord, and it will cost you $250. Still very, very affordable. I want to keep it affordable. I will not increase the price abruptly unless we see a very big spike in the amount of people looking for these. Okay, so courses will be Monday through Friday, 31st of August through 4th of September at 9 p.m. Eastern time every single day, and we will be having limited spots available for this wave as well. So make sure that you sign up, save the date, and don't miss this wave, because the next wave is going to be after a month. Okay, the next wave is going to be after a month. We'll hold a intermediate course after this. Okay, great. Doom. Okay. I can confirm what T said. Course money already recovered. I can vouch for it. He's available and he's best in guiding you during the live sessions. I'm making consistent income from his guidance, slow and steady income. That's awesome. What time's the class is going to be live? It's going to be 9 p.m. every single day. Beginner course is a must do and the best investment if you are serious about make some money and not leaving things to chance. And there you go. Can someone answer this guy over here? He says, don't waste your money, just learn for free on YouTube. Can somebody from the alumni please educate Mr. Oogla Boogla on whether you can find any of the information that you've taken from this course on YouTube? Somebody maybe let him know. Oh, somebody already did. I challenge you to learn what is taught in this class on YouTube. Okay, the Discord promo code will be posted on announcements probably a day before the signups happen. Okay, cool. Got those housekeeping out of the way. I want to make sure that I got to that today and announce that because it's something big that's happening. It's an announcement. I do announcements on the live stream, so sorry if it took too much time, but it's a must to do. Okay then, let's jump into Baba here. We want to do the fundamental evaluation here. Okay. Beyond foreseeing, consolidating. I paid my first semester of grad school with wins after T course. Diego, that's amazing, dude. That is amazing. I just did challenge him. What a bunch of bootlickers. Oh man, Oogla, it's so sad that you think they're bootlicking. I mean, but honestly though, if you think that what you can learn on the mentorship course is available on YouTube, that's the whole reason I made the mentorship course. It was after frustration that I couldn't find what I was looking for on YouTube, and hence I decided to put together my own trading system. So, I mean, you could continue being a hater, but facts are facts, and you would never know till you take the course. Till then, I mean, you're free to do whatever you need to, man. I mean, there's no hard feelings if you don't want to take the course, but you shouldn't be spreading bad vibes though. So, yeah. I was gonna ban you, but I don't think I want to. Let's just let you be here. Okay. It's funny that he says all that stuff, but he's still here though in this stream. He's listening because he's here for the free stuff. He's one of those people. He just wants everything free. Everything is free, man. But until you pay for something, then you actually derive the value from it. Okay, I don't want to spend too much time on people that are gonna waste my time. So let's not feed the haters, and the haters are definitely the motivators. Yes, absolutely. So with Baba, we've been looking at this one the whole week now, and up pre-market again. It's up again. Looks like, you know, it really wants to push the boundary here. So let's see, is this really worth it, right? I mean, what is the valuation of this business, and you know how is it actually so highly valued? Okay, the first thing I was looking at earlier was the SEC filing of the past year. The funny thing is I couldn't find a 10Q report, so that was something that I found interesting. I did find a yearly report, and they actually file it very differently from usuals. So the Form 20F is what they file after doing a little bit of digging. And they actually break it down for you like this. So I pulled up only the operating and financial review and prospects. That was what I have pulled up here because I feel like that's the only relevant thing here. So what do you really want to see here? First of all, we have a 7-step metrics, right, that we follow in order to value a business. And so I like to read the operational and financial review by management because it gives a good idea of where things go in terms of how management is looking at things. Okay, and then it kind of goes to how the management is managing the business as well. That is important for me. It makes up of one of the it makes up one of the key metrics of the 7-point metrics that we go through when we do a fundamental analysis. So they say we achieved significant growth and strong operating profits in fiscal year 20. Our total revenues increased by 51%. That's great, right? For a company of this size to increase 51% revenues. And then, what was this? Okay, net income increased by 31%, which is amazing, right? For companies to make 30% revenue gains, that's really great. And then net income, especially 51% revenue, 31% net income, that's big numbers, okay? Especially when it's in billions like that. So you know that their economical model is definitely superior to its competitors. And it's, gaining market share, right? That's the important part. So Alibaba, it operates in 4 segments. The core commerce, cloud computing, digital media and entertainment, and innovation initiatives and others. So that's going to be the 4 segments that it operates within. And this presentation reflects how we manage our business to maximize efficiency in allocating resources, blah, blah, blah. Okay, I'm not going to read the whole thing because it doesn't make sense. And here's a breakdown of the segments. The core commerce segment is comprised of platforms operating retail and wholesale commerce, China, retail and wholesale commerce, cross-border global logistics services, and local consumer services and others. And then cloud computing. The cloud computing segment is comprised of Alibaba Cloud, which offers a complete suite of cloud services. This is similar to AWS, right? Including elastic computing, database, storage, network visualization, large-scale computing, security management, blah, blah, blah. That's all what Amazon does, okay, with AWS. And then, so they're operating within the Chinese space, which is good for them, right? They're trying to dominate that space, which I think it's great. And last live stream on Monday, we covered how massively this segment has been growing for Baba. So it might quickly become the forefront of the company, okay? And then they have a digital media and entertainment, which we went through last Monday as well, where they have Youku, which is the YouTube of China, and then Alibaba Pictures, and then a bunch of other stuff where they distribute gaming feed content, news feeds, films, live events, literature, music, and other stuff. And then they also have, what is this? Other initiatives, innovative initiatives, right? Such as AMAP, DingTalk, Tmall, Genie, and others. So they have a bunch of other things. These are probably like, high risk, high reward returns kind of things, businesses which they're investing in. Probably, require a decent amount of capital but have high ROI. So that's that. Okay, so here's the breakdown. So 2020. Let's look at the USD column here. I don't want to confuse people. So let's have a look here. This is what you want to look at, this column here, and how much of a revenue it makes up. So China's core commerce retail makes up 65% of revenues. No surprise there. Okay, and then commerce wholesale 3%, retail international 5%. That's actually bigger than their commerce wholesales in China. That's actually interesting, right? And then they have local consumer, local logistics, and then total core. So the core is commerce, makes up 86% of their business. Okay, then cloud computing makes up 8% of revenues right now, but it's been increasing at a 50% rate. So expect cloud computing to grow quickly. Okay, and then digital media and entertainment makes up 5%, and then the innovative stuff makes up only 1%. So their main competency is their retail space. Now, it gives you a breakdown of what these individual sectors go and how they operate. You can go read this on your own. I'm not going to do it. But it's important to know where the revenue streams come from, because you want to know what kind of evaluation you want to do. So for this kind of a business, I indeed would like to do a discounted cash flow method on free cash flows, because that would be a more good assessment of how the company's operational cash flows will be growing through time, right? Okay, so that's what we're going to do here. I just want to very briefly go through those things there. And we're going to come to Morningstar in a bit here. We don't need this no more. We'll do the valuation in a second and see whether everything actually does pass through here. Okay, oh boy. I guess Oogla Boogla was doing some nasty stuff again. Oh boy, you got timed out by a mod, man. I'm sorry. See, like I wouldn't time you out. Quite honestly, I would let you spew on as much nonsense as you possibly can, because I personally don't care what you say. I know what I'm doing is for the benefit of everybody, and so I personally don't need you to tell me, what other people don't need you to tell them what to do. If they want to take the course and they see the value in it, they will. But if you don't want to, you should probably keep your opinions to yourself, because it's unsightly. But yeah, absolutely, I wouldn't be surprised. I probably know who this person is too. I can find out if I really want to. So I will actually go find out and ban this person, because I feel like he's just spreading negativity here for no reason. So yeah. Okay, I'm gonna do the intrinsic valuation here. I just want to read your comments here real quick, because I feel like they get really quickly out of the way, and then I just lose everything. Okay, core is worth every dollar. Just like Keanu says to Patrick, nothing better to do. Must have beat off already this morning. Get the fuck off the stream if you don't like it, bro. Guys. My goodness. Knowledge share is free, but his experience and training is what you're paying for. Mentorship. Exactly, Malik. That is so true. That is very, very true. The classes are considerably more detailed, and you will not learn this anywhere on YouTube. He does cover some appetizers on his free YouTube channels. I have no incentive to promote this guy. This is 100% true, Bulbul. I do the live streams for free because I want you guys to be able to have a actual shot at learning, because I don't want to keep everything paid. I don't feel like it should be that way. It is, but then there's so much of it on the web. You're going to take years navigating through the free knowledge, so have fun. That is completely true. Why are you even on here? Blah, blah, blah. That is very true. That's what I said. I was saying, why are you here? if you don't like it, just leave, right? I mean, T, let the haters come, makes us stronger. Absolutely, Near. I agree. This channel is live. Thank you, Ryan. I appreciate you so much. T, the haters mean you're poppin'. Thank you, Melissa. I'm aware of that. But I like to be humble. I don't like to, I don't like to be that person. It just doesn't make this look good. Take the bad energy out of here. Absolutely, I really don't like bad energy. Let's keep the positive vibes. Absolutely. T, you're awesome. Thank you. This is how you're doing something right. Someone starts to hate. Absolutely. Yeah, he's wrong. The class is necessary. My sister did the class and she's doing a lot better. T is a very good teacher, easy to understand. And if you are so much of a hater, what are you doing here? Thank you, Carlos. Appreciate it. You did not ban him. Awesome. I wouldn't ban him. It's just, it doesn't make sense. Class holds us accountable. Absolutely. YouTube is a great start, but you want to invest in your education, go for whatever course you choose, obviously. But I personally love the EGA course. Definitely planning to do the advanced course in the future. Absolutely. Thank you for saying that, Ugla. I've been searching around on tips and tricks, tools, knowledge, planning more for 2 months. I started training 3 months back, and I don't have much experience. But when I stumble upon here in EGA, changed my edge on training entirely. I feel overall I'm well more informed and much better decision after joining live stream consistently. I'll be joining this course when it opens. That's awesome. If the free content changed my edge, I want to know how the paid module will bring me further. That's my take on your opinion. Okay, where do I find the SEC? Will you recommend signing up for BAM SEC? So you can, so for any specific thing you're finding out, any specific information you're finding out, what you do is you go search investor relation, and then you put the ticker symbol like that, right? And then you'll see investor relations for them. And there you click on it, and then you go to investor relations. They always have an investor relations tab, and find SEC filings. And that's the quickest way to get all the reports. But for this specific company, because they are a Chinese company, the report is a different report. So I was trying to find the quarterly report, but see what happens when I go look for it, it only shows me the 6Ks. There are no 10Ks, which is what I'm looking for, so I tried to Google it, but I wasn't able to find anything. So I decided to go with the annual report, which is fine as well. The annual report, what it means is it's basically 4 quarters put together. So it's the same thing. I want to do a yearly analysis. I don't want to do a monthly analysis, but I was trying to get the 10Q to basically get a better understanding. What does a hedge position mean? Sorry, silly question. Kabir, there are no silly questions in this stream. You always ask any question you have. We always answer them because learning is a process that everybody needs to go through, and there are no stupid questions, Never. So hedging is a kind of a counter position you take to something. Let's say you have a long position in Baba here, and you're long, you're bullish. You take a counter position, which is a short position or a put, to hedge a downside risk. We call it hedging because now if Baba comes back down and you have a big long position, your long position is protected by this short put. Not the short put, the short or the put. Okay, that's what it is. Okay, cool. Let's get into this intrinsic valuation. Who's ready? Let's get a couple of fire emojis in the chat going. I hope you guys are having a good morning. Make sure you guys smash the like button. I feel like we can get to 100 likes today. I'm not sure if we can, but maybe we can. Let's see. It would really be nice if we can get to 100 likes. Yeah, that's all I ask for. If you can smash it, cool. But yeah, let's get all this oogla boogla talk out of here. I want to see some fire emojis. I don't want to go back and have this bad vibes on here. Okay, cool. Let's do this valuation right now. So I have my intrinsic valuation calculator here. I have shared this with you guys for free. It's on my Twitter. Once again, on my Twitter. Go check it out. I've pinned it onto my profile. Hello all. Let's promise. Here's the link to the intrinsic value calculator. All the boxes in white need to be amended. Click on this. It goes to the Dropbox link, and you'll see this file in there. This is the intrinsic value calculator. And this is what we need to do the valuation. Okay, so let's get it done right now. Okay, so the first thing we need to do for a fundamental valuation is see a couple of things, right? Is revenues growing over the past 5 years? So we look at the income statement, that's where revenues are found. And we're gonna look at the past 5 years of revenues, right? And see, have they been growing, okay? So have revenues been growing? 1, 2, 3, 4, 5. They have been growing indeed, right? Revenues are growing. That is a check mark, right? That is a check mark. And then now next we need to see, have cash flows from operations been growing, right? And that goes not to income statement. You go to the statement of cash flows, which is here, and we're going to skim through here, right? And you can see cash generated from operations here, right? And has it been growing? Absolutely, right? This is a solid growth business, right? Solid growth business here. You can see that the cash flows are increasing at an increasing rate. That is solid, right? And then what else do we have? Oh, actually, I have an infographic I can show you that kind of summarizes all the things that you need here. So let me just pull that up real quick. This is what you need. So this is kind of like your roadmap, right? If you if you want a roadmap for how cash flow, what are the metrics you're looking for? So increasing revenues, that's number one, right? Increasing operational cash flows. Number two, stable ROE. So let's have a look at that, right? Let's go here. Macro trends is what I like to use. You can go BABA, and then you can go ROE. There we go. And then it pulls up the history for you, right? And then we go have a look at this one. So how has ROE been doing for the past, let's say, 5 years, right? Since 2015, ROE has been positive, so that's a good thing. Stable, see, and it's a stable ROE. So what we want is ROE to be stable. We don't want negative and then positive, and then negative and then positive. What we want is stable, positive return on equity, which means they're returning money to shareholders. Okay, so you can see here return on equity in the last column here. You can see that it has been positive indeed for the past 5 years. Okay, past 5 years has been positive. So simple and easy to follow that this company is a good fundamental company so far. Okay, so far everything's good. Okay, so ROE stable. That's good. That's good. Now, economic moat. Does this company have an economic moat within its segment? Absolutely it does, right? BABA is one of the only companies, well, it has competition, but it's the biggest of its kind. And it's definitely one of the companies that has a big moat in China, right? They are also expanding their businesses, so they do have economic moat. What is the economic moat? This is the competitive advantage. Okay, competitive advantage. That is what economic moat is. So we're looking at whether this company has a competitive advantage, and it does. It indeed does. Now, management style-wise, who is the founder and leader of Alibaba? It was Jack Ma, right? Or it is Jack Ma. I'm not sure if he still is there. But Jack Ma is a great leader. He has been a visionary for the company since they started. And I think that his management style is pretty legit, right? Now, the last one, conservative debt, right? How much debt does this company have? And for that, we can look at these metrics here. For debt metrics, I like to look at Morningstar because it summarizes everything for you. So the debt metrics are all here in one little nice place, okay? So remember what we say here. Now, here is the beauty of it, okay? For people who have been attending the live stream for a while, okay? You're going to see something that... you're going to see something very important here that discerns Alibaba from the other companies, okay? Now, with debt, do you remember we spoke about, we spoke about quick ratio and current ratio. You guys remember that? We've been talking about quick ratio and current ratio for a while. And quick ratio is the one that we call a asset test in accounting. Okay, we call it asset test. If you're a finance person, you're familiar with what I'm talking about. This takes into account the assets minus the inventory on hand over the liabilities of the business, right? Whereas the current ratio, these are the current assets. Sorry, this is current assets. And this is current liabilities. And this is just the current assets and the current liabilities. Current assets over current liabilities give you the current ratio. The current assets minus the inventory over the current liabilities gives you the quick ratio. Okay, so do you see why in this certain case Alibaba is very different from Amazon? Do you guys remember what I'm talking about here? I'm gonna pull it up so you can actually see what I'm talking about. And once I pull this up, you'll see what I mean. Because we were doing evaluation of Amazon before, and I showed you this, that there are only 2 to 3 businesses which are acceptable to have these ratios at a low level. Look at the current ratio and the quick ratio for Amazon versus Baba. Do you see the considerable difference? It's almost 0.5 and 1 more, okay? That is the difference. Because Alibaba does not hold inventory. That's why. It doesn't hold inventory. That's the reason why their ratios are better, okay? So they have more assets to cover their liabilities. It's simple as that, right? They don't hold so much inventory, so they have more assets to cover liabilities. Their business is operational at a lower leverage rate. Whereas Amazon has huge warehouses and they store a bunch of different stuff, right? And they send deliveries each day out on boxes and blah, 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 right? Well, what does Baba do? Baba just makes the buyer meet the seller in the marketplace, right? And that's you. So the difference here causes the difference in financial health. It doesn't mean that Amazon's financial health is bad. What I'm saying is there's a difference here. You need to learn to recognize the difference. But you can see that the debt to equity ratio of Amazon is more levered than Alibaba. What does that mean? It means that Alibaba has only 0.16. This is the debt to equity ratio. Okay, and this is extremely low for a company like that. Okay, now the interest coverage ratio, 41 times. It can cover its interest payments 41 times, which is great. Okay, and the current ratio, almost 2. It has 2 times the assets over liabilities. Okay, and then the quick ratio, it has 1.5 times the assets over liabilities. All right. So that's the way you're gonna view this. Okay, great company, right? Think about it. Really great company. Okay, all right. So now that we know all this stuff, we know that this company passes all 7 steps. This is a investable company. Okay, it is a investable company. I know you guys are thinking, why didn't we cover this earlier? But honestly, it's okay, guys. It's okay. It's completely fine. Don't worry about it. Covering it at some point is better than not covering it. Okay, so we will get a pullback on Baba and you will know how much this company is worth now. So let's go into the valuation right now. Okay, so let's do this really quickly. Operating cash flow, the current, that is what we need here. So what is the operating cash flow here? We'll do the 2020 operating cash flow. This is 18061, so 180610. Okay, total debt 147.29, 147,290. Because the numbers are in billions, so you multiply it by 1,000. Just FYI. Cash in short term equivalents. Whew, look at that, $300 billion in cash sitting around and cash equivalents. Jesus, 36322. 363,220. Boom. Okay. Now we need to look for the growth rate, and we're going to look at what growth rate for cash flow is. So how are we going to do that? We go here. We're going to do Baba, and then operational cash flow. Oh, let's do cash flow from operating activities right there. Okay, and we do a 10-year period here. So, oh, we don't even. Oh, do we have a 10-year period? We don't have a 10-year period. All right, we'll just do for what period we have then. That's crazy. This company's not even been around for more than 10 years. Okay then. We'll get rid of this, we'll get rid of this, that. actually. No, yeah, that. Okay. Okay, nice. Holy crap, man, guys. Wow, this business is a monster. Jesus. I can't really tell you that this business is undervalued, more than likely. Okay, so average 10-year growth rate, if we're not doing 10 years anymore, we're doing more like whatever years we have here. So what, 8 years, right? 8-year growth rate average was 36%. Whew. I'm talking about cash flow from operations, okay? This is in millions. So the growth rate is about 36%. They've been growing. Let's go ahead and be, okay, so let's say they grow at what? I want to say, let's say 30%, okay? The first 3 years now, and then they're going to grow at about 20% the rest of the way, okay? Actually, let's even go half and see what happens. Let's do a conservative valuation, right? And then let's do the number of shares outstanding. $2.7 billion shares outstanding. Oh, okay. Wait, is that right? Okay, let's see. 2.705. So that's 2705. Yes? Million? Yeah, that is correct. Now the discount rate is what we need. Okay, let's have a look at this. Go to models here. We're gonna do the revenue exit, 10 years, view this, and just view the discount rate, a higher discount rate here, 12.5 to 11.5. So let's do 12. Actually, hold on, 11.5, and let's do 12. Okay. I feel like something is off and I can't understand why. I think our growth rate might be a bit too high. Well, our intrinsic value gives us $794, guys. I think we might be with too high of a cash flow, the growth rate here. Let's try to reduce this here. Even so, if you did this, it's too high. Oh, wait a minute. This should be 12, and this should be 13, 14. And then we'll go 30 here, and we'll go 15 here. Okay. Discounted value, blah, blah, blah. Seems like it. Let's have a look at Finbox here. Our valuation is super high. That's crazy. Yeah, this is okay. Let's say 30%. Let's go like 25%, and then at 15%. I say 25%, 15% is fair. The rest of the years, $600 fair valuation with a high growth discount factor here. I think this is about it. This is as close as assumption you're gonna get, and our model says it's $600 per share. Oh yeah, that's right. $600 per share. Okay, and let's look at Finbox here. Finbox has a $388 fair valuation. Now let's have a look at their model. Their model is saying this next year they'll do a 30% growth in revenue, 25%, 21, 16, 14, 10 over the years, and then negative as they go on. capex at 6%. What is the discount rate here? They're using 12.510. Okay, the tax rate here, depreciation, amortization, directed revenue. Okay, and wait a minute. Oh wow, look at that. Their net working capital. Okay, so that's fine. Okay then. Oh, thank you, Invictus. I appreciate that. Gourmet craft coffee to down the ignorant jabbermouth and caffeinated. Your good vibes. Thank you, man. I appreciate that. I really do. Thank you. Thank you. So this is an interesting one, right? Valuation is super high. We need to make some tweaks for sure. This is going to be something that I will have to work on a little bit, because I feel like the values are a little stretched out here. So I think 600 is a bit high. We need to definitely do something about that. But there you go. There now you know. Now you know that this company is still undervalued. Wherever it is, it's still undervalued. Based on its cash flows, based on its business model, it can still run. Okay. Obviously, does that mean that you go ahead and buy BABA right now? No, right? No, it doesn't. It just means that you have to be careful, okay, and buy it on a pullback. All right, but this is a good business to own long term. That's what this means. Okay. Okay, well, that was certainly eventful of a live stream today. I want to say thank you guys for tuning in. I'm sorry that I couldn't get to tickers today, but maybe come back on tomorrow. Oh no, well, tomorrow we have, remember tomorrow that we have a webinar that will go over how to position trade, okay, which is a long term, like when people say leaps and stuff like that, how do you take those, okay? Remember, if you're here, make sure you smash the like button. I appreciate you guys being here. So we'll do a position trade webinar tomorrow, and then on Friday we'll do a recap of BABA and everything else. So I hope to see you guys there. Make sure you guys don't overtrade today. Stay within your limits, and yeah, I'll see you guys tomorrow. Thank you guys for tuning in. Have a good one, guys, and peace out.